Well, we finally got the Fed meeting minutes, and as expected, there was discussion by at least two folks about going 50 basis points. Actually said a few. I don't know if a few was two or three, but certainly there were some like Bullard and Mester who were talking about going 50. But again, it was a unanimous vote. 9 members voted to raise 25 basis points. It is pretty clear that I think Bullard is the most hawkish. He currently sees 3 more rate hikes, probably in 25 increments, although you cannot rule out a 50 basis point move in March. We get PCE on Friday, I believe, personal consumption expenditure. Pay attention to PCE core. There is a really good chance that PCE core breaks the downtrend, right? We had CPI earlier, PPI, both disappointed with more inflation, but the downtrend was still intact, barely. I believe PCE core will reverse that, and we'll just have to say inflation is still a problem. Remember, folks, we're the only ones talking about this. Inflation has 3 components. There's goods, that's just about over. There is housing, which has got 6 to 9 months more, and finally wages, aka services. We are probably going to be in this wages/services fight for over a year. There's a lot more inflation. Going from 9 to 6 was relatively easy. 6 to 4 will be hard, and 4 to 2 will be really, really hard. Other things that came out today: mortgage purchase applications down 18.1%. The index was down 18.1% to 147.1, lowest in 20 years. Lowest in 20 years, folks. The housing market is broken. It's broken. We saw rates tick down below 6. Now they've shot up. It is really hurting affordability out there. So again, mortgage applications down. They're actually down 41.5%. Unfortunately, as Logan tells us weekly on Housing Wire, inventory is trending in the wrong direction. So we have a broken housing market. There are no sellers and there are no buyers. It's just a frozen housing market. FOMC model, this is the Fed's model, is actually predicting that core PCE, this again is the one that we need to look out on Friday, that may reverse the downtrend. They don't see it getting to 2.75 until 2025. Can you believe that? They don't see PCE core. This isn't PCE headline. This is PCE core getting to 2.75 until 2025. Folks, rates are going to be higher for longer. Get used to 5, 6, 7% mortgage rates. We're just going to be here for a while. Don't know if you saw this, but Redfin just published a report that said there's been $2.3 trillion in home equity lost. Folks, we are suffering a housing crash. $2.3 trillion lost. That's 4.5%. There are going to be people talking about this number like it is the end of days. It is 4.5%. Note, if you bought in February 2020 or before, you are up $13 trillion. Yes, folks, you are up $13 trillion after losing 2.3 trillion. So yes, it is true, we are down 2.3 trillion from the peak of June, but this is not a housing crash. It's down 4.5%. Some markets like San Francisco are down double digits, but again, we talk about national housing and it's just not that bad. Again, the total housing market, just so you know, is estimated to be worth 45.3 trillion. So the total market today is 45 trillion. You're up 13. So let me do some math. So you went from 32 trillion to 45. That's a 30% increase. I would say 30% increase in 2 years is not a housing crash. But yes, there will be people all over YouTube talking about $2.3 trillion and the end of days. A couple other things I thought were interesting is millennials. When you look at millennials, Gen X, baby boomers, and the silent generation, actually millennials had the largest increase in percentage of home equity. They increased their home equity $5.6 trillion, or about 26.7%. They're buying, I'm guessing, lower or first-time homes. Those saw the most run-up. I think that explains. That was interesting. Millennials were more than Gen X. Gen X was more than baby boomers and the like. So it's pretty interesting stuff. Lance Lambert's out talking about 400 largest real estate markets. 276 of them are below their peak, but can you believe it? 124 are at their peak today. Folks, there is not one housing market. I would argue there's not 400 housing markets. At a minimum, in your buy box, there are 3 housing markets. There's a luxury, a move up, and an entry level. So again, when we talk housing, like the housing market lost $2.3 trillion, national speaking. But yes, median home price now is $383,249. Was $433,133 in May, down 11% in May, since May, but up 1.5% since January. So lots of fun stuff there. One thing we got to talk about inflation is, how long is this going to be a problem? Let's just try to put some bands on it, right? We went from 9.1 to 6.4, I think was the last headline reading. We probably can get to 6 by the summer. Can we get from 6 to 4 by the end of the year? I don't know. Then can we get from 4 to 2 by the end of next year? These are some things to think about, because again, the Fed's not cutting rates. If you hope the Fed is cutting rates, you are greatly misguided. They are not cutting rates. They are going higher. They will freeze, they will pause, but the Fed is not cutting rates. Inflation is simply too sticky. Rates are going to be higher. There's talk of a recession in 2024. Most people are writing off a 2023 recession, given how strong the jobs market is, and people are buying experiences and services and not stuff. What will happen to the stock market, right? The stock market's now going, hey, maybe the earnings recession's not now, maybe it's later. Lots of exciting stuff going on. And then in housing, it's a broken model. The supply is not coming. In fact, I think there's a very good chance that people will be surprised at home builders. Home builders are going to probably do pretty good because they're not competing with the existing homes like they used to, right? A lot of people, I think Black Knight said 85% of folks have a 5% or below mortgage. They're not moving. They're certainly not moving in the next year or two. So I think new home builders actually might experience a little bump because there's no inventory. Now that's not true everywhere. Know your own market, look at your own buy box, but that was interesting. And lastly, we got some earnings. Etsy beat top and bottom and raised. Nvidia beat top and bottom, and eBay beat top and bottom. So folks, a lot of companies are beating top and bottom lines. Etsy and eBay we were looking at because it was a sign for the consumer. They did really well. Nvidia, now with these AI chips, is kicking butt again. So lots of stuff going on, folks. I hope you have a wonderful day. We are in our second port of call in Bali. Had a wonderful day today. I think we have some rain clouds coming in, but hey, it's a beautiful day. I hope you enjoyed it. Take care. Bye.